Hey, it's Trevor here with your September 2025 housing market report for the Edmonton market. We're going to be going into all market segments, first starting off with the market as a whole, then looking at detached homes, townhouses, duplexes, and finally apartments. Each one of those segments, we're going to look at whether it's a buyer's market or a seller's market or a balanced market, as well as delving into some of the sales numbers and prices. So let's jump right in, starting with the market as a whole. So this is total residential. It's everything kind of mushed together. So it's not the most useful. If you're, let's say, buying an apartment, you probably shouldn't go off just this, but it still kind of piles all the data together and it's still helpful to look at. So the first thing we'll look at is the absorption rate. So this is what we use to determine whether or not it's a buyer's market, a balanced market, or a seller's market. And it's sitting at a 30.98% absorption rate, which is right on the cusp between a weak buyer's market and a balanced market. So that's continued to drop each month since about March. In March, it was all the way at 50%, being on the verge of a seller's market, and now it's worked its way all the way through a balanced market to the top end of a buyer's market. That has shifted quite a bit over the last 5 months or so. The average price was sitting at $428,619, which is still up for the year. So it's up 6.2% in 2025 so far. 2024, over the course of the whole year, average prices saw a 7.89% increase. So we're not up as much as we were last year, at least at this point. Now, if we look into the active and sold, so this is basically the numbers used to calculate the absorption rate, and it's looking at the number of active inventory at the end of the month and how many sales there were that month. So there was 5,316 active listings at the end of August, and there was 1,647 sales. Inventory bumped up a little bit from July. It was up 2.27%, but up substantially from the year before. It was up 26.36% from the year before. And sales were down 15.06% from July and down 7% from the same month last year. So only a small uptick in inventory, but a pretty decent drop in sales volume with 15% drop in 1 month. That pretty much explains the additional drop in the absorption rate and bringing it closer to a buyer's market. Average days on market was sitting at 37 days, which is also up a few days. It was 34 days the month before, and it was 34 days the year before. Now, in terms of market distribution, this is just the price ranges that the sales actually happen. So just over 14% of sales under 200K, just over 15% between 2 and 300K, just over 17% between 3 and 400K, and 22.5% between 4 and 500K, that being the most popular segment for sales to happen. Still a decent chunk between 5 and 600K, with 15.24% of the market and 7.62 between 6 and 700K. Then we got about 3.5% between 7 and 800K, 1.9% between 800 and 900K, and 0.9% between 900K and $1 million. So that's it for the market as a whole. I do like to look at the benchmark prices rather than just the average prices. Like, the average prices can be skewed if you have a lot of higher priced properties selling compared to previous month, or if you have a lot of lower priced properties selling, that could really start to skew the average. But if you look at the benchmark price, this is a little bit more consistent if you're just trying to figure out, okay, are property values actually going up, down, or staying the same? Now, if we look at the benchmark price for the composite, so that's again everything kind of mushed together, you can see that the benchmark price in August 2025 in Edmonton was $413,800, which is pretty much on par with what it was last month. In July, it was within a few $100s or $1,000 of that, so that's why you see the line just going sideways. I put a couple other points out on the chart here. You can see in June 2025 it was sitting at $427,300, and in March 2025 it was sitting at $427,800. So basically, we had peak pricing for the year between March and June, and it pretty much stayed steady for March, April, May, June. So you got 4 months there where it stayed steady, and now we're down about 13,500 from the peaks. So not a huge shift by any means, but it's still there, and we're still obviously above August 2024 pricing. So who knows, maybe we'll continue kind of going sideways here. September is usually a pretty strong month. October, not usually as strong as September, but by the time we get into November, it has typically slowed. So I wouldn't be surprised if we saw a few more dips before the end of the year in the benchmark price, but that's a relatively seasonal thing. Nothing to get too excited or worried about, depending on what side of the table you're on. So let's take a look at detached homes. But before we go into that, I just wanted to let you know I am a real estate agent here in Edmonton with YEGPro Real, and I'd love to help you buy or sell a home in Edmonton and surrounding communities, including rural. Best way to get started is to either just reach out to me directly at 780-819-5508. You can text me or call me. Better to text me though if you don't get me on the phone right away. There's a lot of spam calls these days, and if you just call, I might assume you're one of the spam calls. So try shooting me a text if you prefer to reach out that way, or go to booktrevornow.com and then you just select a time on my calendar and book a 30-minute call with me. So yeah, let's look at detached homes. So detached homes have a slightly higher absorption rate, sitting at 32.17%. So it's still technically balanced, but getting closer to a weak buyer's market. And it's the same story as the market as a whole, where it kind of peaked in March when it was at 49%, almost a seller's market, and then just slowly shifted a few points every month until here we are, when we dropped another 5% in terms of the absorption rate in the last month. Average price for detached homes was sitting at $551,062. That's down 3.24% from last month, but up 4.52% from August of last year. If we look at the average prices for the year, they're up 7.23% for the year versus 8.87% in 2024. And active and sold listings at the end of August, there was 2,754 active detached homes on the market, and there had been 886 sales. Inventory was up just barely. It was up 0.77% from last month, but up 37% from August of last year. So a big shift from the same time last year. And the sales were down 12.62% from July and down 0.89% from the same time last year. So there's still strong sales, especially if you're comparing it to last year. Although since there is significantly more inventory, that should allow more sales to happen, but it's about the same number of sales as the same month last year. Now, average days on market was sitting at 36 days, went up almost a whole week from last month. It was at 30, so pretty big shift from July to August. Again, not a huge surprise. I often find there's a dip in the market starting in July. This year, it didn't feel like it actually happened until August in terms of the drop off, like a substantial change in the number of sales. Like, don't get me wrong, it's still busy out there. There's still properties getting multiple offers if they're a hot property and they're priced right, but that is a noticeable shift in the number of people that are actually buying properties. So if we compare it to the same time last year, it was at 33 days. So taking a few more days on average compared to the same time last year, not a big deal. And then market distribution, you got less than 1%. It's under 200K, 2.72% between 2 and 300K, 12.6% between 3 and 400K. It's become a very small segment. Everything got pushed up. There used to be a lot of action between 3 and 400K, but that's pretty tight now. Between 4 and 500K was the biggest segment with 28.54% of the market. And then between 5 and 600K, you had 26.04% of the market. Still a large chunk there. So most of the action, like more than 50% of the action, is between 4 to 600K in the detached market. 6 to 700K at 13.64% of the market, and 7 to 800K at 6.43%. 8 to 900K 3.47%, and 900K to a million 1.64%. Then you got 2.73 between 1 and 1.5 million, and 0.78 between 1.5 and 2 million. After that, you got 0.44% over 2 million. So for detached homes, I like to take a look at separate benchmarks for this. So I like to look at the 1-story benchmark, which is going to be like bungalows, bi-levels. You know, you have 1 level above grade and then usually your basement, and then a 2-story benchmark afterwards. So starting with the 1-story benchmark, you can see the benchmark price in August 2025 was sitting at $456,900, and the peak for this year was in March. In March, it was at $473,400, about 17K below the peak in March. So not chump change, but a decent amount of shifting since the peak. It's kind of been a little jaggedy since March for 1-story homes, but again, we'd still be up pretty substantially from the same time last year. Now, if we go to the 2-story, it looks a lot different here. We're not seeing the same kind of dip. If you look at the 2-story, you see in August 2025, the benchmark price was sitting at $572,100. If you look at the same kind of time frame, that peak for 1-stories, in March 2025, it was $556,200. So just since March, it's gone up about 16K up since March, whereas the 1-stories, you're actually seeing it being down since March. So definitely playing out a little differently for 2-stories. There's continued to be strong demand for 2-story homes. A lot of families obviously appreciate that type of setup. And on this one, I did also put it on the graph where it was at in August 2024. So just a year ago, the benchmark price for a 2-story home was $523,800, almost 50K that it's up in the course of a year. So That's a pretty substantial move. Like that's very easily like a down payment, for example, that got gained on average just in the last year for 2-story homes. Gives you a little bit of perspective there. The next segment we're going to look at is semi-detached. So this is basically half duplexes. And you can see here the absorption rate was sitting at 33.81%, which again dropped actually pretty substantially from last month. Last month it was sitting at 42%, so it dropped almost 10% in the balance just in the last month. But it's the same kind of thing in April's at 64%, so it's actually a pretty decent seller's market. And if you look further back, you can see in January it was at 70%, December 62%, October of last year 58%, and August of last year at 83%. So much different feel in this market than it was last year. It was bonkers last year. That's definitely cooled off quite a bit. Average price was sitting at $420,317. Average prices are up 5.19% this year versus 9.07% last year. Actives and solds, there was 494 active listings at the end of the month, and there had been 167 sales. Month over month, inventory was up 4.66% and up over 113% from August of last year. So that was a big part of the problem last year. There just wasn't enough inventory. Now sales are down 16.92% from July. So again, a pretty substantial shift in the number of sales happening going from July to August. And year over year, they're down 13.02% from August of last year. What got way more inventory here and substantially less sales, like 13% less sales in the same time last year. So that's definitely pretty interesting. Average days on market was sitting at 35 versus 29 in July. So you see that jump up of almost a week, 6 days from July to August. And market distribution, under 200K got 0.68% of the market, 2 to 300K got 6.71% of the market, and 3 to 400K got 27.03% of the market. Between 4 and 500K, you've got 47.36% of the market. So that's the king for this market segment for sure. And then 5 to 600K got 12.6%, and 3.93% between 6 and 700K, and 1.08% between 700K and 800K. After that, it's pretty minimal. Don't have any benchmark pricing for semi-detached, so we're just going to look at row townhouses. So this will predominantly be condo townhouses that are going to be in this segment. And you can see it's sitting in a balanced market at 36.98% absorption rate. That's also come down substantially from earlier in the year. Just back in May, it was at 67%, so it was a seller's market. You can see a handful of other times this year, it was also a seller's market, including August of last year when it was at 81%. So this market has also cooled down substantially. There was a pretty big push there for a while, but we've seen steady drops in the absorption rate as the market has shifted it in the last few months here. Average price was sitting at $299,235, which is up 5.78% for the year, but last year was up a whopping 11.54%. So some big gains last year, still some gains this year. We'll take a look at the benchmark price here in a bit. Actives, there were 703 active listings at the end of the month and 260 sales. So the actives are up just 4.46% from last month and up 82.12% from August last year. So much different feel compared to last year. And the sales are down 16.93% from last month and down 16.93% from the same time last year. Kind of funny how it was the exact same month over month and year over year change. Average days on market was sitting at 32 days. So it went up a few from July when it was at 29, and last year was at 29 as well. Market distribution, you still have over 15% under 200K, and then 34.46 between 2 and 300K, and 35.29 between 3 and 400K. So 70% of the market between 200K and 400K is for the townhouses. 13.17% is between 4 and 500K, and then after that, it's like nothing between 5 and 600K at 1.22% of the market there. Now, if we look at the benchmark pricing for townhouses, this one is interesting. So August 2025, benchmark price was sitting at $285,000. If you just go back to June, it was at $295,700, so just over 10K drop just since June. In March was technically the peak for the year when it was at 300K. Between March and June, it went down 5K. So March, April, May, June. So over those 4 months, it basically peaked and then went down 5K. And then from June, July, August, within a couple more months, it dropped 10K. Same time last year, August 2024, we're sitting at 264. So still up about 20K from the peak last year. Like the peak last year, it kind of looked like it was pretty much August. Not massive gains, like 20K in 1 year, still substantial. Looked like a lot more if you were looking at the numbers between March and June, but that market has really shifted, as you could see in those absorption rates. So it makes sense that it wouldn't be nearly as crazy, and you'd actually have to start seeing some people get a little bit more flexible on their price. Maybe they were optimistic because they saw what was happening earlier in the year. You know, they list in June or July, and there's more inventory now, there's less buyers, and okay, maybe we're not going to get 300K anymore, and you have to kind of go down from there. So that's kind of what's been happening in the townhouse market. Last up is the apartment condo market. So this one has an absorption rate of 22.75%. So worse than everything else, pretty square in the middle of a buyer's market. It hasn't moved much. If you look over the last 13 months, you see it come up a little bit here and there, but you didn't see the big shifts like you saw in every other market segment. We're at 22 now. From March until now, it went from 32 to 22. Dropped since then, but not nearly as big of a shift as others. Average price was sitting at $208,681, which according to averages is up 6.83% this year, and it was up 6.65% in 2024. Actives and solds, there was 1,468 actives and 334 sales in the month. The listings are actually down 3.42% from July and up 18.39% from August of last year, and the sales were down 19.13% from July and down 10.22% from August of last year. So sales are down more in this segment as well. Average days on market was sitting at 45. So the first thing that should stick out to you is that's substantially higher than all the other market segments. It was 47 days last month and 42 days same time last year. And market distribution, you got 53% under 200K and 35.25% between 2 and 300K. That shows you right there, 88% of the market is under 300K, and then 8.2% between 3 and 400K, and 1.68% between 4 and 500K. Benchmark, this one looks more interesting than it should have. August 2025, benchmark price was sitting at $197,100. And you could see there was that big uptick earlier this year and then a sharp drop just in 1 month. I think they somehow screwed up this data. If you look at my other videos, I did one specifically on apartments. I never saw a big shift in prices on the ground when you're actually doing deals that showed up in the benchmark price. So I think somehow they were like too closely tracking like some random properties or something that ended up looking like it went up, but the market really didn't go there. And then it seems like they were able to self-correct last month, the July numbers, and then now it's down slightly from there as well. And I punched in the August 2024 number here when it was at 193,300. From August 2024 to August 2025, there's been barely any movement in price, not even $4,000, right? That's how it felt all year. So that little I don't believe it at all. I think somehow they messed up, but yeah, that's just my experience. Prices haven't moved much. It's been a buyer's market the entire time, basically. If you look at the absorption rate, they never went up like that. Hopefully it didn't get anybody too excited with their apartments. There continues to be a lot of inventory, a lot of people that want to sell, and not enough people buying. However, I have had a lot more apartment buyers this year than I have in recent years. So that's just anecdotal. I just happen to have apartment buyers reach out to me this year maybe, but it is what it is. So that's where we're at for apartments. That basically wraps up the September 2025 market update for you using most recent statistics available, which is the August numbers. Hope you guys got value out of that. Leave me a comment below, and I will see you on the next one.